Hello, everyone, and welcome to another edition of This Week in Crypto. I'm here with Dino. My name is Brian, and we're excited to go over everything that's been happening in the markets this week. It's been kind of a flatter, sort of rangy last few days, but over the last week, we've actually we've seen some nice improvement in the markets, even though it doesn't really seem like that due to recency bias. I'm going to start off here by showing off our screener here. But first, of course, I want to remind everyone that all of the tools and charts and metrics that you see here today are part of our platform. Most are part of our paid plan known as Sandbase Pro. So if you don't have it yet, we highly encourage you to check it out. We will be putting up another discount code here in the near future as we get close to Christmas, so stay tuned for that. If you were able to get in on our 50% off Black Friday deal, congratulations on a very nice deal, if I do say so myself. Half off is no joke for all of these tools and metrics. So hope you guys are enjoying and taking advantage of them. And we'll be going over plenty of on-chain and socials today, but by all means, do feel free to ask some questions in the YouTube chat, and we'll be sure to get to them toward the last 15 to 20 minutes of the call here. So as I said, we'll be starting off with just the general screener as I usually do. What we're looking at right now is the last 7 days of price performance for Bitcoin and the other top 100 projects in crypto, according to market cap. As we can see, we had about 85% of the top 100 in the green in terms of price returns over the past week. So great to see here. Obviously, Bitcoin being up 12% was the crux to most of it, as most altcoins, as they almost always generally do, are going to fluctuate and ebb and flow according to what Bitcoin is doing, even in just a 7-day span in most cases. So clearly it was an altcoin week. Many projects exceeded Bitcoin. And, we had outliers such as NEM, we had Aave, we had Compound, Decred, which we posted about a few days ago, Nexo, MadeSafe, and even Rune, which I've almost never covered, but very interesting to see here. And congratulations if you were in some of these projects. It looks like Bitcoin has had a very nice week at plus 12%, but for kind of the psychological sentiment, a lot of people were having mixed feelings about it because we saw that there were a lot of new entries, a lot of investment points with the expectation that it would blow past 20,000. That actually hasn't happened yet. We hit around 19.8K on most platforms, some of which were official all-time highs. Other exchanges, it wasn't quite at that all-time high. This often happens. There's going to be a difference of 100 to even 300 at these levels in terms of overall market price. And you'll see it kind of fluctuate here and there, depending on the exchange, depending on how liquid or illiquid their order books are. So if you heard that it was an all-time high, but you're seeing contradicting reports elsewhere, know that this is because it's based on various exchanges having different data, at least in terms of Binance and Coinbase Pro. And Dino, you can correct me if I'm wrong. I heard that we didn't quite eclipse those all-time highs, but if I'm mistaken on that, apologies to everyone.
That was what I read as well. It depends on the price aggregator that you're using, really.
Exactly. So good to see here, guys. Obviously, the 7-day cycle has been great. It's been very bullish. When we talk about sentiment, though, I want to start off by going over how the crowd has been reacting to this price action. And as you might expect, it's still mostly positive. This graph right here, for those who haven't seen it, is essentially just calculating the sentiment balance, which is the ratio of positive to negative commentary according to our algorithm, multiplied by the amount of overall unique social volume. So the amount of total mentions of BTC or hashtag Bitcoin, depending on the social platform. This is actually using Twitter. So it's looking at all Bitcoin or hashtag BTC mentions. And we're seeing that it's still quite positive. Obviously it peaked. You can't see the price data here, but you can, it roughly peaked when Bitcoin was eclipsing around 19.6 for the first time, if I recall correctly. And it dropped just a little as people were disappointed that it couldn't quite get over that 20K barrier. But keep in mind that when I highlight over this and it's showing right just under 1.0, this means that over the standard deviation of what's considered the normal mean of where Bitcoin's weighted social sentiment should be, we're about 1.0 over, which doesn't happen too often. We've had a few instances in the past here, back in August, back in early May to mid-May. Yeah, we got over it in July 2019, and we got over it in May 2019. Now, 3 out of 4 of these instances ended up being corrections, or tops, as we like to call them. Here, of course, was the famous Bart Simpson in August. This was more of a ranging pattern, but it did drop in May. This was the exception in May 2019, and July 2019 was obviously a huge local top that faked out quite a few people. So this is a pretty good indicator when it comes to social sentiment, and right now it's showing that we're a little too euphoric still. I'm hearing someone entering the room, by the way, guys, if someone can let them in. Now what I'm going to show you is a brand new model that we've been working on, known as the exchange percent of supply comparison model. And what this is doing is comparing all of the top 20-ish to 25-ish, give or take, top projects that we have data to in terms of their exchange percent of supply on exchange versus off exchange. So essentially, this is measuring over the last year of data for these projects, whether they are in a more bullish or more bearish territory compared to its norm. So I highlight based on which tab we're on, whether the bottom half is more bullish or the top half is more bullish, based on the fact that these projects are currently off exchange on this chart here, which is the overall amount of supply on or off exchanges. So below here essentially is off exchange, above is on exchange. You can see here we had Gnosis going through the roof. So this is obviously an outlier, and it would be pointing to the fact that lots and lots of its total percent of supply is being moved onto an exchange. And this is generally a not so great sign, because it's a signal that a massive amount of coins are planning on being traded or usually sold off. In the case of these lower ones like Bancor, Band, they've actually seen a very healthy amount of coins being moved off exchanges. So this is a really tremendous comparison model, in my opinion, to sort of use as a quick reference to find whether projects are more skewed toward the bullish or bearish scenario based on whether it's on or off. I won't go too long on this, but know that we also have whale data, which is very interesting. So instead of just the overall total supply, we can look at the percent of supply of whales and what they're doing overall, the on-exchange top 10 whales and the off-exchange top 10 whales. So if you want access, you can beta test along with us. It's still going to be a work in progress, and we're working on optimizing this, making sure it is as useful and easy to understand / comprehend as possible. Really quickly, and then I'm going to hand it over to Max for a few minutes here to go over SanR. I want to go over the daily active addresses, which are mostly still staying pretty flat. We had a few good days in December, on December 1st and yesterday, but they weren't, over the hump of some of the recent highs back in mid-November here. Good to see that these large daily active address bars have shown up, but they aren't quite in the range of something that would justify growth, in my opinion. And our divergence model, as you might expect, kind of confirms that we're still well into the bearish range in terms of how active addresses have grown compared to the price. So even though they haven't dropped active addresses, price has simply just risen way, way far above where active addresses typically do, based on historical values. One other thing I want to show is our trading volume, social volume, and on-chain transaction volume comparison. We had one of the friends of the company, BTC Jack, posted yesterday about how the TA right now is showing a lot of polarization in terms of the indecisiveness of traders, and the support and resistance levels are very tight, indicating that the price could, of course, break in either direction. But in his opinion, we're in kind of a no trading zone because of the fact that those support versus resistance levels, in terms of those psychological levels where the price can either explode or drop down, are very, very tight and very difficult to navigate right now. And what I found interesting is that our on-chain metrics are essentially indicating exactly what he's saying. We have sort of declining trading volume right now. Ever since our peak in the morning of December 1st, we've kind of dropped off, and we peaked with on-chain transaction volume a few days before that on November 30th, and we've gradually dropped off there. And of course, social volume, we peaked just before the on-chain transaction volume, and social volume has dropped off. And what this is essentially saying is that we are not we're not getting a common consensus on whether the price is in a good or bad position. A lot of people think we're about to drop off. A lot of people think that, you know, we're going to zoom right up to 25K. And this is saying that we're having a little bit of fear, right? When trading volume is starting to drop, especially when price is rising like this, just slightly, and trading volume is dropping, that's generally a sign that the crowd is moving away from the trend. And this is actually a little bit of a mild bearish divergence. You know, I think we have better metrics than trading volume in isolation, but this is you know, what would be considered a mild divergence. Social volume wise, it's okay that we're dropping because it means that the crowd isn't talking about the asset as much as they were, you know, 4, 5, 6 days ago, and that could actually be a good thing. But overall, when all three of these metrics are fading down, it's a sign of indecisiveness and a little bit of fear. And overall, I think it's a mildly bearish sign, but it's also more of just you know, kind of a complacency signal for the market right now. I think a lot of people are just waiting for it to, you know, jump above 19.8K or jump below, you know, something like 18.8K, and it's at about 19.1 now. So I think that, you know, we're a little closer to the 18.8 range. If we hit that, there might be a little bit of a dip right after. Doesn't mean we're going to fall down to 16 or 17 again, but it does mean that those psychological levels of 18.8 versus 19.8 will dictate a lot of the next week. And these signals will kind of start to jump up again once one of those ranges are breached. All that being said, I'm going to temporarily send it over to Maxim here. He's going to go over our SanR tool a little bit and discuss its value and why you guys should check it out.
Cool, thank you. I will be short. Well, I will try. So SanR, yeah, I think let me share the screen.
And Gary, can you share in chat the link to SanR?
So it's been in our roadmap for quite some time, and it's actually not so much as a tool; it's as a platform. It's a platform where the ultimate question is answered when the market is going down or up, and but the answered in a specific way. Yeah. So we have here designed, developed in the last, I don't know, 3 or 4 months, what we call the missing part of DeFi. Regardless where we participate, if we have our own portfolio or if we have participate in liquidity pool or special liquidity pools, because of you can lose your collateral more in value than what you earn on percentage. Regardless what we're doing, it's, at the end of the day, always a decision we need to make. Do we believe it's a good to stay in the market, or the risk is high, better to go out. That's all the major market signal. Now, Sunbase, our weekly seminars or our newsletters, everything is about helping you or giving you what we're using ourselves metrics and data to build the context where you can make decisions. SanR is an ultimate goal. Once you make a decision, you publish a signal. Yeah, and those who are the best get rewarded. And in the next 1 or 2 weeks, we start rolling out more things like token economy about how you can follow our signals, and if someone is very valuable signal, how its value is being increased over time, and it's deserves to be early in the game, definitely. And just as an example, I know it's if you open the link, browse around. At the moment, you can only publish signals. Yeah? You cannot follow or open the signals of others. We will maybe next week we'll publish it. Yeah, whenever market moved down a few weeks ago, there were quite some providers that catch it pretty precisely. You will see by yourself. Just click on the token and you will see we developed quite nice visualization. You can see when a signal was issued, either sunrise or sunset. Sunset means it will, analyst believes it will go down, and when the signal was closed. But also when the market was growing, someone catch it up. Yeah? There are smart folks around. It's still small. We don't market it too much. We rather prefer to do early adopters, so that who want to participate early but contribute, instead of going everywhere with bit marketing. And if even you're not sure how good your signals are, as this is exactly how you should use this platform tool, it doesn't matter. You then simply don't use the special button. There will be, once you logged in, you will see like stake SANs. You don't use the stake SAN, you just do by yourself. And you will see how good it's for reflection. Why is it good? We show all your signals in very good visual way. Yeah, so you will very fast you realize how I call it trader DNA. Are you good in spotting tops or bottoms? Are you always shock one step too early or one step too late? It becomes very obvious, very visually convincing. I myself also there. I will not reveal yet which account is it, maybe later on. But take a look. If you can start just log in here with your MetaMask account, because it's only everything here is crypto related, no fiat payment, nothing. Just log in with MetaMask account and start publishing or start recording for yourself what you feel about market. You think it'll go out? Okay, just issue sunrise signal. You think it'll go out? Yeah. Okay, issue sunset signal.
Max, can you do a like a preview or a demo of how to issue a signal?
Not now, because then I will reveal my account.
Okay.
Yeah,
that's
yeah.
right.
I can do it next week. Yeah, just sure. Let's consider a short introduction. If you have, but really, we spend some time on UX. It's very obvious. Just try it out. And at least I never got any complaints from people saying that I don't know how to use it. It may be not everyone wants to go the full mile, like go stake SAN tokens and start issuing signals. Yeah, yeah. But in the background, there is a powerful engine running. Like there are a set of smart contracts already designed and deployed. Edge signal is actually an NFT token, but on a side chain. So it's quite a lot of technical things which are under hood, and even more is coming to become really decentralized and easy to identify value platform. And like some teasing, we even designed just today, and start developing how you can bet on the future value of this or that provider. So there will be future of analyst intelligence. I think will be a lot of cool things. So enough for short introduction. Maybe next week, or if you have questions, just ask in the chat. I can answer. Yeah, it's one of the things which I personally participate in designing and developing. Yeah. Other than in Sunbase, there is a big team behind. Mostly I'm doing the analysis. Sometimes I write also insights under some special name. But here I participate in the whole development process.
Yeah, thanks for showing this off, Max.
Yes.
I can definitely vouch that this is a really cool tool. I've obviously tried it out a few times myself, and you know, it's risk-free, guys. Even if you put in, you know, your estimation of where the prices will be going next, there's no downside if you're wrong. But there's obviously crypto rewards if you nail the prediction. So it's a great way to sort of learn what the markets are thinking in terms of their sentiment with the markets, while being able to experiment and, you know, kind of place your wagers yourself without having any risk involved. And that's a pretty cool thing. All right.
Yeah, and I will just share now also a link to Medium article where I go a bit more in details why we did it. I will post a link in our feed here.
Yeah,
and you will see that we just launched it literally like 1 week ago. Okay, yeah, you continue. I will post a link.
Sounds good. Thanks, Max. So this is our MVRV comparison of opportunities and danger zones in the markets according to our top 25-ish top projects we have data on for MVRV. For those of you who don't know, this is essentially measuring the average investment returns over time for 6 of the most popular time frames, that being 1 day, 7 day, 30 day, 90 day, 180, and 365-day returns. What we do here is we combine all of those returns by average traders to give us a blended metric or algorithm, if you will, that explains where in the markets we are in terms of the average trader success versus, you know, upside versus downside in terms of their positive or negative returns. And the closer we are to the opportunity zone, that generally means that the average traders are well below a 0% return. Closer we are to this danger zone, that means that the average traders are well above that 0% zone. And right now, Bitcoin and Ethereum here, as you can see, they're both just, as it refreshes here, as it loves to do during these calls, but they're both a little in the semi-overbought territory right now. And that essentially means that the trader returns, if I go to all MVRV here as it's starting to load, yeah, Bitcoin, all 6 of them, other than 7 day, which is right at the even point, that's why you can't really see the bar here, all 6 of these time frames show that the average traders are up anywhere from just slightly, as we can see on the 1 day, to pretty significantly, as we can see on the 30, 90, 6 month, and 1 year MVRVs, which are all quite above where they normally are for these respective time ranges. And when all of those are blended together, that's why you see, you know, a negative 0.54 signal, which means it's about, you know, if 50% is 0, if that's the average line for where Bitcoin normally rests historically, we're at about the 25% range in terms of 0 being bearish and 100 being bullish. So we're definitely in the bearish range because of the fact that we look over here and the average trader returns are, for the most part, universally in the positive return range right now. Obviously, Ethereum is essentially in the same area, actually a little bit more bearish than Bitcoin by just a hair. But keep in mind, of course, this is just one of many metrics that we like to use. MVRV is one of my favorites to go along with daily active addresses, which we just showed off. But know that this is best used in tandem, and it shouldn't be used as direct investment advice just by saying that something like compound has massive returns, therefore, you know, it's always going to go down. There's going to be variation in the markets, and there will be extremes and anomalies that can make this model have some limitations. I'm going to show just 1 or 2 more things and then hand it over to Dino here. Bitcoin's NVT, for those of you who don't know, NVT is the measurement of market cap divided by, in our case, token circulation, which we use for this model. Token circulation is the unique amount of tokens that are being moved back and forth between addresses at any given time. It excludes things like wash trading so that it really gives a direct you know, snapshot of what addresses are doing at any given time without recounting the same tokens over and over again that are moving back and forth. For the 3rd straight month, we have a semi-bullish signal for Bitcoin, and it's essentially letting us know that we are getting a healthy amount of tokens moving back and forth in the network. As you can see over time, it's a pretty accurate predictor. We have red here, of course, as prices were going down, red here as price was kind of veering upwards. So obviously the model wasn't able to accurately gauge that the price was going to go up the way it did. But of course, it was a little more flat than it is now, right? As soon as we got a semi-bullish signal, that's when prices exploded, right? And over time, that tends to be the case. Even back here in 2017, as soon as it went green, that's when price exploded. Green, price explosion, right? That's when the 2017 bull run happened. So this is a great model. And considering we're in our third straight month, based on just a very small sample of 3 days in December, it's promising that we're having a continuation of healthy token circulation. If this continues and we still see something like yellow, green, or green bar here by the third week of December, that's going to be a pretty confident signal that going into 2021, we are continuing to see solid network activity from a token circulation perspective, and we can be confident that the price isn't going to take a huge tumble, right? That's what this signal does. It's a good predictor for the following months because it's a long-term indicator, of course. Don't use this for day-to-day or week-to-week trading, but if you're seeing green, it's a good sign that the price is at least going to stay propped up and not have a significant drop-off. If you see red, obviously vice versa. So good sign there for Bitcoin bulls. Anything else I want to show on that? We got our screener, we got social sentiment, hit MVRV. Really quickly for Ethereum, the daily active address divergence continues to look bearish. It's not quite as bad as Bitcoin here, right? Because we see a few neon reds here, but Bitcoin is just massive neon reds for the majority of days over the last 2 weeks. So slightly better activity, but still bearish according to this model. And what this model is doing is measuring 4 straight years of historical data. So it's not a small sample size, guys. This is basically looking at 4 years of daily active addresses and 4 years of price and blending them all together to let us know of each day in the last 4 years, how much separation on average there is between active addresses and price. And these neon reds mean they're in the bottom 10% of that separation between price and address activity, meaning price is going way up, but active addresses are kind of staying in neutral. And that's why you're seeing these neon reds. So we'd love to see a little more address activity pick up to be confident that Ethereum can continue up toward 650 and 700 and beyond. But this tells us that on average, we have a better chance of the price dropping than continuing to rise. But obviously, we've been in red territory for quite a while, and price has ignored it. So eventually, address activity will either catch up, or price will catch up to address activity, and we'll see which one happens. It should be interesting. That being said, any other projects that look good right now? Ren, Fetch, OMG, and Quant appear to be the only ones that are significantly in bullish territory. Ripple is also just slightly above on their long-term divergence trajectories. So if you guys want access, just jump in the Discord. We'll give you instructions on how to tap into this model. If you connect your API, which you get as soon as you're a Sandbase Pro member, all of this data will update in real time for you, and you can refresh anytime by going to any yellow cell and going to today +1, switching to today +0, and then straight back to +1, and you'll see everything refresh. That being said, I'm going to stop my segment here, send it over to Dino, and we'll try and answer a few questions together at the end.
Thanks, Brian. Great stuff. Guys, okay, I already see a few requests for coins that you want us to look into. We'll take a look at it after I just show a few metrics for Bitcoin and then SUSHI, because I think it's a very good use case for our data. All right, so one of the ways that we kind of promoted this video is by saying that there's growing indecision or data about growing indecision in Bitcoin's fundamentals. So what does that mean, or where do we see it? So Brian showed a few different indicators that kind of already point to this fact. One of them being the fact that daily active addresses have kind of just done nothing over the last couple of weeks. They've stayed in the same range. They've plateaued for the most part. We have seen these sort of growing signs of market not really sure about what to do about Bitcoin in the past couple of days, pretty much since the start of the week. So I'm just going to go over a few signals that validate this theory for me, at least. So number one is the funding rate on BitMEX, the perpetual contract funding rate. So essentially, guys, when the funding rate is positive, especially when it's extremely positive like this, essentially what that means is that most of the market speculators are long, so longs are paying shorts on average, and you can see that these types of high levels of funding, BitMEX funding rates, as well as Kraken and Binance funding rates in a similar way, they tend to form around local price stops for BTC. In other words, there's not a whole lot of time that the market participants stay in extremely bullish territory before we see a sort of consolidation or a short-term correction. We saw it here. We saw it on September 1st. We saw it in the November 25th, so basically last week's dump. And then we saw it here before we corrected to start this week. So since then, we've once again dipped into neutral territory. So no more are we super long on the market as far as the derivatives are concerned. People or speculators have once again kind of dipped back into ambivalent territory. Longs are no longer paying shorts, nor are shorts really dominating. It seems like at the moment we are still in the sort of undecisive territory or indecisive territory as far as the derivative market is concerned. One other thing that I noticed is that this spike in age consumed is because of the Silk Road wallets moving their old funds. So I like to zoom out of it just to kind of show you general trends. So we also see a constant sort of dip in age consumed here. So what age consumed does is it tracks the activity of previously dormant Bitcoin. Essentially, when you see spikes in age consumed, what it basically means is that a substantial amount of previously dormant coins are starting to move once again. So you can very often see these sort of spikes coincide with local bottoms and local tops as well, because they point to major shifts, behavioral shifts in long-term investors, sometimes even, in the cases of altcoins, even ICO investors. In whatever case, what we want to see is how our long-term Bitcoin holders sort of react into this new sort of ranging frame that we've seen happen over the last couple of days. And it seems for now that long-term investors are pretty much staying close to their bags. The age consumed has continued to decline for the last couple of weeks, pointing to the fact that on average people are not moving their bags, or at least long-term investors are not moving their bags. They're not selling off. It seems like as far as the hodlers are concerned, they are still kind of in a wait and see approach, and they're for the time being at least not making any major moves. It seems to point to a sort of also rising indecision about where Bitcoin is actually going to go. And as Brian also mentioned, MVRV is sort of just in the middle of the road. Like if I zoom out to the last year and I take the 30-day MVRV, which points to the average unclaimed profits of all addresses that have acquired Bitcoin in the past 30 days, you can see that we are currently at about 7%, right? So on average, all addresses that have acquired Bitcoin in the past 30 days are about plus 7% in profit. So as you can see, these levels are kind of in the middle of the road. Obviously, this was a major outlier because of the Black Thursday dump, so take this with a grain of salt. But in general, we have seen Bitcoin keep above these levels for quite a long time, and we have also seen it dip much further than this. So, once again, we're kind of in the middle of the road for BTC for a number of these metrics where we could go either way. And it's going to come down to general sort of market sentiment and a few indicators that I'm going to talk about in a minute to point us in the right direction. And then finally, like Brian said, the amount of activity on the network, on the Bitcoin network, has continued to decline, or at least it's plateauing. It's not rising in tandem with the price, meaning that on average, the amount of activity that is going on the Bitcoin network is not reflective of its price action, or it's lagging behind its price action. And we can see this also in the holder distribution for Bitcoin. So at the moment, we're looking at the combined balance of addresses holding between 0.01 and 0.1 Bitcoin and 0.1 to 1 Bitcoin. I'm actually going to take this off for now. So basically retail sector here, right? And what we can see, let me zoom in so you can see it a bit more clearly, is that the retail sector is actually not super bullish on this rally. In fact, I mean, we pointed this out in our insight last week as well. But in general, they have stopped accumulating and have started going into sort of, redistribution mode, reshuffling mode as early as Bitcoin's 15.5K breach here. Since then, we haven't really seen them recover. They've bought a little bit, obviously, right before the dip, as it happens with the retail crowd. The moment that they decide that, oh, you know what, this rally might be for real, we see a correction. But overall, we haven't really seen a strong confidence among retail sector. We can also see that kind of the same pattern occurring around midterm or mid-sized Bitcoin whales. So anyone holding between 10 to 100 BTC has also stopped accumulating around these levels. So slightly after the retail sector has stopped accumulating, which was here. And since then, they bought the dip a little bit and have started declining their balances, or their combined balances have started declining once again. So the question is, who's actually pushing this rally, right? Who is actually accumulating BTC? And one of the people that we want to look into here, or one of the holder groups that might be still responsible for this 19K push, is mega whales. So anyone holding, or all addresses holding between 1,000 and 10,000 BTC. As you can see, there has been a few sort of ebbs and flows lately, given the correction, obviously. But on average, the pattern is still going up. So out of all of the groups that I've just shown, it seems like the most confident about Bitcoin's sort of short and midterm potential continue to be whales. So for me, moving forward, I would keep an eye on this particular group. I would obviously keep an eye on all of them, but I would keep an eye on this particular group as well. If we see sort of major moves, especially major declines in the balance of these addresses, we might finally see, let's say, the other shoe dropping, right? So the market sentiment, or whale sentiment, moving from bullish to increasingly concerning, which might be one of the ways that we sort of are able to predict upcoming price volatility. So keep an eye on this chart, guys. And I'll share a link to this setup in the chat so that we can share it on YouTube as well for anyone interested. Here it is. All right, one final breakdown before we look into a few coins that you guys wanted to check out. So we published this yesterday. All right, we published an insight on SUSHI, which we ended by saying, we said, looks like we have a bit more worrying signs on SUSHI than positive indicators. The risk is high. So since then, SUSHI has dumped by almost 10%. The question is why? And I wanted to show this because it's honestly such a good use case for a bunch of our metrics. It's so clear. It's not usually going to be this clear, I think, but a number of different indicators for SUSHI have pointed to sort of red or yellow signals or yellow flags yesterday before the correction, or 2 days ago, sorry. And I'm going to start with social volume, right? Let's take all of these out. I'm going to start with social volume. So social volume is the amount of mentions of SUSHI related mentions that we have captured, or our system has captured, on crypto social media. So very often in the past, when you can kind of see it here around local tops as well as here. In general, whenever we see these types of like sustained spikes in social volume for a couple of days, it usually points to a risk of an incoming correction. The reason why is that when we see spikes in social volume, especially during a price rally, what it points to is sort of periods of peak hype. when the crowd is super irrationally confident about a coin's short-term potential, and as a result, FOMO starts to permeate all sort of chatter, and whales usually start dumping at around these junctions. So when we saw that this sort of spike or a string of spikes in Sushi social volume, we thought that a short-term correction might be very near, and indeed it was. So that's as far as social data was concerned.
Dino, may I extend it a little bit?
Sure, of course.
For social volume, because here it's indeed clear pattern, but it's more than what you said.
Mm-hmm.
The key point, crowd is talking, acting, and excited, extremely. Everyone agree everything is good in the middle of the rally, and you see very often the highest spike in the middle. Then the price keep pushing, but less and less participants are, and this is the reason why price turns around, because there are less and less participants. And we constantly, whenever we look for tops, we look for this kind of divergences, ideal cases, and they happen more often than what you would believe. When social volume, trading volume, on-chain transaction volume, on-chain Daily Active Addresses and new addresses, shows the same pattern. It happens, yeah. And in this case, you see it was social volume strong enough, and SUSHI is a very community-driven project, similar like iFi. I think it was at the moment when iFi announced the collaboration or acquirement. So the pattern is very specific, has to be paid attention to. Price keep pushing, amount of participants is decreasing. It will go down. Very often it will go down. And there are a few exceptions, and we can cover it when we come back, for instance, for Bitcoin and Ethereum, because they are probably, especially Bitcoin, is pushed not by crowd anymore. It's big investors, but SUSHI, it's community, and it's really pure wrecked game. So
yeah,
you have to pay attention to this metric social volume every single time. Sometimes it's not a divergence, but extreme spike. It means some very good news came, and then the last push of participants who bought comes and then turns around. But it's like, I would say 50-50. 50% will be divergence, 50% will be explosive whole community attention, so that everyone is in. Well, when everyone is in, who is left? No one. Market turns around. So I just want to give a little bit more background.
Absolutely. I agree with everything you said. This is, I think, as far as checking out what the actual crowd sentiment is like, I think this is one of the best indicators that you'll find on the market. But this was just social data, right? So basically, we were only looking at what the general sort of market reaction was to SUSHI's rally, and obviously to a few SUSHI mergers or integrations that they've announced recently. We have also seen very concerning signs in SUSHI's on-chain data. So I'm going to just start with two of them, which are exchange related. So, and I'm going to zoom out a bit so you can see it. There we go. Okay, so let's start with daily active deposits. Daily active deposits are essentially a metric that shows the amount of addresses that are moving SUSHI to exchanges on a daily basis. So these addresses, these so-called deposit addresses, the only purpose that they have in life is to move coins to exchanges. Essentially, when you move, for example, I don't know, Ethereum to Binance, it doesn't directly go to a Binance cold or hot storage. It first hits a so-called deposit wallet or deposit address, which also belongs to exchanges. So what we do with daily active deposits is we track all of those addresses whose only purpose is to funnel, in this case, SUSHI, to exchanges. When you see a spike in daily deposits, especially when it happens during a price rally like it happened here, it essentially points to a strong rise in sell-side pressure. And as a result, it points to an increased risk of a short-term correction. So we saw a very sort of sustained or strong rise in SUSHI's daily active deposits as it started to rally, pointing to a increased risk of short-term sell-offs, which obviously occurred a few hours later. We have also seen a relatively noticeable, let me show you in a 4-hour interval, a relatively noticeable uptick in SUSHI's exchange inflow. So exchange inflow points to the total amount of SUSHI that have been moving to exchanges over time. So similar to daily deposits, when we see these sort of, after a period of relative dormancy, when we see these sort of spikes, especially when they happen during a price rally, that often points to increased sell side pressure, which is unlikely to be absorbed. Like, for example, you will also see spikes in exchange inflow like here happen during local bottoms as well. The difference is that at this point, there's going to be a lot of people interested in buying the dip, interested in absorbing this sell side pressure, because they'll be able to buy SUSHI at a discount if they believe that SUSHI is going to do well in the future. Here, you are expecting speculators to buy SUSHI at a premium. So when you see a spike in exchange inflow during a rally, the likelihood that this sell side pressure is going to be as easily absorbed as this one falls down considerably. We have also seen another, we just mentioned it a minute ago, age consumed. Another concerning signal for SUSHI in the short term, which was the sort of string of spikes, and this particular spike in SUSHI's age consumed, pointing to the fact that some previously dormant coins, SUSHI coins, have now started moving between addresses. Like I said a minute ago, we often see these types of spikes coincide with short-term either price corrections or price bounce backs. Age consumed is not a top indicator, it's not a bottom indicator, it's an indicator of upcoming a price volatility, and that's why you'll see it happen here before a rally, and it will also happen here before a price correction, in here as well, here before a rally, and then here shortly before we see a correction. So these are a few. We have a few others that we mentioned in this particular article, including the 30-day MVRV, which was the highest that it's ever been for SUSHI, pointing to the fact that short-term SUSHI holders were about plus 73% in profit. They have never been this much in profit before, pointing to increasingly overvalued conditions and increased likelihood of SUSHI holders starting to claim some of those profits, and as a result, tank the price down in the process. So I think Gary is going to share this insight in chat for anyone that's interested in learning more. I think this is a super clear tutorial on how to use some of our metrics to try and predict future price action. It's not going to happen always, and it's not going to be, as clear as this one. Like, I think this one was relatively clear. It could have been clear, but this is the way. This is the way that we use our metrics on a daily basis. So check out the insight and let us know what you think. And yeah, that's gonna be it for my side of the conversation here, guys. We have seen a few questions, or I've seen a few questions of different coins that people would like us to look into. So I see two different people asking about Link. So let's look at Link, and then let's look at one more coin before we end it, because we don't want to go too overboard as far as our stream is concerned. Anybody else that wants us to look into additional coins or talk to us, check out our Discord. The link is in the description of this video. We talk about these types of metrics and these types of chart setups pretty much every day in our trading channels. So let's check out Link. All right, so let's zoom into the last 3 months, and let's start with social volume. I would be surprised if I saw any. Yeah, I would be surprised if I saw any sort of significant spikes in Link social volume, because number one, its price action has kind of been raging similar to BTC, and on the other hand, there haven't really been any major announcements. Like, the only announcement that I would consider semi-major was that Andre Cronje has revealed that I think Keeper is going to be integrated, or is going to be integrated Chainlink, but even that hasn't really been recorded in our social volume as massive, as a major announcement. So in general, Link's social volume is in a state of decline. It has been since November 20th, which is overall a relatively good sign, right? You don't want, like we showed a minute ago when it comes to SUSHI, you don't want too much crowd interest in your coin, especially during rallies. So these sort of calms before the storm types of events in social data are relatively what we are looking for when it comes to evaluating whether a coin can bounce back or recover or continue to grow, whatever it is. So essentially, at the moment, Link social data is giving room for the price to grow in the short term. But we also need to look at other fundamentals, of course. Let's look at the amount of sell side pressure. I'm curious what Chainlink is looking like. Okay, so once again, I mean, it's pretty much the same picture as we just saw a minute ago with SUSHI, right? Especially if I zoom out of these sell side events during September. So daily active deposits, or the total amount of addresses that are moving Link to exchanges. What do you know? It peaked to, what was this? Like a 2-month high, maybe even higher. Let me, yeah, so here, yeah, it's basically like a 3-month high. So the amount of deposits, of Link-related deposits, have peaked at a 3-month high on November 24th before we encountered a correction. Obviously, this was a market-wide correction, but I also saw a number of coins follow this same pattern. So I think it was, the entire market was kind of priming to dump, because not only Bitcoin and Ethereum, but a lot of different sort of altcoins have also had this pattern, where we saw a massive spikes in daily deposits before a correction. So since then, we had a slight spike once again here before a short-term correction. Since then, however, and in general, Link has been in a downward trend as far as the amount of Link being moved to exchanges. By the way, are we still live? Oh yeah, we are. Sorry, 1 sec. Okay.
Yeah,
we're live, right?
Good.
Okay, good,
Yep.
good. So deposits are in a decline, which is good. You want to see this sort of exhausted sell side pressure, right? You at the moment, as the Link is ranging, you don't necessarily want to see too many people getting out of the market and feeling bearish about it. As far as the total amount of Link moving to exchanges, let me zoom in our interval a bit. All right, so this was these sort of string of spikes of Link moving to exchanges. So this is interesting, right? You see the amount of deposits has actually peaked here, pointing to the fact that most people were selling, or the largest amount of people or addresses were selling here, but the biggest amount of Chainlink was actually moved here. So there's been a lot of people that have missed the boat and have decided, oh no, I don't want to, sell it at either at even less of a price. So they decided to capitulate here, sell at the dip, and unfortunately for them, Link was able to recover fairly quickly. So this is also what I mean when I say you will often see spikes in exchange inflow also near bottoms, because when you see this type of spike, right, what it points to is that since we dropped so considerably in a span of 24 hours, there's going to obviously be an increase in sell side pressure, but there's also going to be presumably a lot of people that are looking to buy the dip and stock up on some alts, especially alts like Link, right, which has super a massive community and has a lot of developers working on it. There's going to be people that are looking to buy Link at a discount. So when these types of spikes in exchange inflow get rejected, you obviously have, you very often have a sort of price recovery shortly afterwards. Since then, once again, we have seen, similar to daily deposits, we have seen a decline in the amount of Link being moved to exchanges. So once again, on average or in general, it seems like Link sell side pressure is declining ever since the November 24th top, and as well as the bottom here, which is good. It's not necessarily going to be a make or break for Link, but it does give the room, the coin room to grow in the next couple of days and weeks. We should also obviously check out the amount of addresses on the network, which have, once again, you see this sort of massive rise in daily active addresses during a dump, obviously pointing to short-term exodus, weekend selling off, and reshuffling on the market as far as Link coins are considered. Since then, the amount of daily active addresses has obviously declined quite heavily, but it remains relatively normal. I mean, Yeah, if you look at Link's daily active addresses, this is not a concerning decline. Obviously, it kind of gets dwarfed by this spike. But in general, there's still about 7,000 daily active addresses, 7,000 addresses interacting with Link on a daily basis, which is great. It puts Link in like top 5 ERC20 coins easily by daily on-chain activity. It's fine, right? So this is also looking fine. Let's look at age consumed. Yeah, so I've been seeing this. I need to take a closer look into what this actually means. I've been seeing this sort of just a wall of spikes for Link's age consumed recently, which hasn't really happened before. I don't know if there's been a sort of any sort of smart contract changes or anything that would explain this further. However, assuming that it hasn't, and these are just organic spikes in age consumed. So here, obviously, we see once again major spikes in age consumed around the bottom, pointing to a strong behavioral shift by long-term holders. And shortly afterwards, we see a generally strong trend upward. Now we see a pretty big spike right now, actually happening maybe an hour before we started the stream. So it's going to be interesting to see whether this envelops and in which way it envelops. I would consider this to be an age consumed spike during a downtrend, a relative downtrend. So obviously we can go even further down, but keep an eye on it. Usually age consumed spikes are indicators of trend reversals. So we'll see if this pans out for Chainlink in the upward direction in the next couple of hours and maybe a couple of days. But once again, I would take this with a grain of salt because I'm not sure why the sort of double spikes in age consumed have been happening for Link for months now. So just take this with a grain of salt until I know more about what is causing these. All right. Last thing I want to look at is MVRV, or the average unclaimed profits of both long and short-term holders. Now let's look at the last year of data. All right, so we are currently just at break even, 0.05%. You can't make it up. All right, so let me draw a line here. So similar to Bitcoin, right? The average unclaimed profits of short-term Chainlink holders or addresses that have acquired Chainlink in the last 30 days is 0.05%. So short-term Link holders are currently breaking even. This is sort of middle of the road scenario where we can go up like we did here. Similar, we kind of got to a break-even scenario, and we got to a break-even scenario here, and both times we went up, or we can go down like here. Sometimes we have seen this sort of a 0% act as a support, but I don't necessarily think this is something to consider. I think in general this just points to a it points to a market indecision, or points to a middle of the road scenario for Chainlink where we could go even further down, or we could bounce back very quickly. So at the moment, the MVRV doesn't point to oversold or undersold conditions, right? It's 0.05, pointing to the fact that we're just at the middle of the road. So what you should look into, or what you should consider when thinking about 30-day MVRV here, is that let's say you're a short-term Chainlink holder, right? And your current profit margins are 0.05%. Basically, you're breaking even. The question that you're posing to yourself is, do I sell or do I hold? And depending on, this is obviously going to depend on various market conditions. It's going to depend on their faith in the general crypto market, in Bitcoin's short-term potential, a lot of different things. But the answer to that question is basically going to be, very important for Chainlink's short-term action. I don't think a lot of people are going to be selling Chainlink here, me personally, just because it doesn't really make a lot of sense to sell a break-even, right, in general. So I would expect that I would hope, well, not hope, but if I were looking for a strong Chainlink recovery or bounce back, I would actually want this to go down even a bit further, so into negative, maybe like here, like minus 20%, just so there's enough sort of, let's say, pain felt by market participants before the MVRV points to definitely undervalued conditions before we can bounce back. At the moment, sure, there's a potential for bounce back, but there's also just the same a potential for a further correction. So it's really just a middle of the road indicator at the moment. 365-day MVRV is very similar as well. So we've been higher, we've been lower. You know, it's going to come down to other indicators, I think, rather than the MVRV at the moment. So, okay, what's the conclusion? Similar to Bitcoin, we're kind of just ranging at the moment. So there's declining social volume, which is good. There's declining sell side pressure, which is good. There's sort of neutral or plateauing on-chain activity in terms of daily active addresses, which isn't great, but is fine, right? And then short-term and long-term link holders are kind of in the middle of the road as far as their unclaimed profits. So to me, this isn't super bullish, but it's not bearish either. Once again, this is the entire market looks like this at the moment. You know, I wouldn't be, I could say, you know, 50-50 really, that we go into either direction. What I would be looking for in the next couple of days is more signs of, you know, volatility into either way. So I would look for maybe spikes in daily active addresses to point to a potential for a recovery. I would look for spikes in exchange inflow and daily deposits. If that happens, I would maybe consider leaving my link position because that points to increasing sell side pressure, which I'm not sure that's going to be absorbed at these sort of levels. So just keep an eye on these metrics in the next couple of days as they progress. At the moment, they could really go either way. All right, Brian, did we have any other coin that people wanted to look at, us to look into?
We have mentions of AST, AXS, Octo, all pretty small coins. Do you think we gave enough attention to Ethereum itself? We could always do a little bit more on that.
Sure, let's do ETH. And let's end it there. I saw somebody also mention Keeper. We're gonna, I think, have a short insight on Keeper later today. It's definitely a talking point in the market. So yeah, keep an eye on that. Ethereum. All right. I was looking at Ethereum slightly or shortly before the call. One of the things that I noticed is that the miners are continuing to dump after a period of sort of, you know, accumulating once again here. So for those unfamiliar, yeah, go ahead.
I actually wanted to ask about this because I posted about the percent of supply following the ETH2 merger. And I'm wondering if miners' balance might be skewed due to some addresses changing on the miner side. Do you think there might be some overlap there?
Absolutely, and I mentioned this in the last week's report that this particular metric is probably, as well as the things like age consumed, which also spiked last week, and a few others. It's definitely going to be skewed by deposit by ETH's deposit contract going live, or basically a lot of people were moving, or whales and miners were moving their Ethereum to ETH2 deposit contract between like November 23rd and 25th, somewhere around here. So this is definitely going to be, you know, it's sort of hard to read whether it was really sell side pressure or it was actually just people moving ETH to stake, which actually should be quite bullish, right? But this current or latest drop off in miner balances is more clear to me than that. This is no longer miners or anybody else moving their ETH to the Beacon chain, but rather just once again, I think this is a sort of sign of short-term sell-offs for Ethereum miners, which in the short term does sometimes tend to coincide with local price stops, like we saw here, like we saw here, like we saw here as well. So yeah, just keep an eye on this. It's been going on for the past couple of days, coinciding with Ethereum ranging. Miners are one of the key stakeholders in the Ethereum ecosystem for now. So their general sentiment still carries a lot of value and a lot of weight when it comes to ETH's price action. All right, let's take a look at ETH's exchange activity. So this is what I meant a minute ago when I was talking about Chainlink, right? I mentioned that it wasn't just Chainlink that had this massive spike in daily deposits before the November 24th correction. We saw this for a number of coins, including Ethereum. So the daily deposits have spiked to a month high on November 24th, right before the correction. And like I can take a link as well and just plot it here against it so you can see what it looks like. Yeah, so these are Link deposits and these are ETH deposits. So both of them have experienced, so Link, it was like a 2 or 3 month high. Ethereum, it was a month high. In both cases, we saw a dedicated or clear signs of increased sell side pressure before a market-wide correction. I published an insight on this last week titled "Why Did We Dump?" or something like that. Just doing a post-mortem on this entire correction. There's a lot of signals that you could have caught here, pointing to the fact that we might be looking for a correction. So Gary, if you want to share our last week's pro report in the chat so people can take a closer look, that would be great. And then once again, we saw a spike in deposits here as Ethereum broke 600 once again, leading to a short-term correction. Since then, actually not, we've seen a sort of declining in the last couple of days at least. We've seen a declining sell side pressure. This is something that you do want to see in general. Especially when it comes to these sort of ranging patterns like Ethereum and Bitcoin are undergoing at the moment. This sort of decline in sell side pressure, definitely something that that should bode well for Ethereum. All other fundamentals staying the same, or if all other fundamentals agree. So as far as Ethereum's exchange inflow is concerned, it's pretty much the same picture as we saw with Chainlink. So there has been some profit taking here at the top, but there's also been a lot of capitulation here at the bottom. So people were moving their Ethereum at a higher clip right after we dumped, pointing to weekend sell-offs, short-term capitulation, selling the dip, which has been rejected by the market and quickly absorbed by bulls. Since then, on average or in general, similar to Chainlink, we have seen a decline in sell-side pressure. Good, right? At least in the short term, the sort of exhausted sell-side pressure should bode well for the price, all other things being equal, or all other things being bullish. Obviously, not the only sign that we should keep an eye on, but one of the things that that we should definitely keep in mind. Daily active addresses are so similar to Chainlink here, but since then, daily active addresses have stayed relatively normal.
Gino, excuse me, we're looking at active addresses of Chainlink.
Oh, that's right. Good point, Gary. Good catch, actually. Let me move it. I was like, it's interesting that it had the same sort of spike. Yeah, it had a spike, but not the same one. So this is Ethereum's daily active addresses. So for a while now, it's been kind of stuck in this 400,000 to 450,000 range. It's actually dropped now in the past couple of days, even below 400,000, which isn't great if you want your coin to rise or your coin's price action to be validated by its on-chain activity. But it's not terrible either. Like we have seen Ethereum grow higher in these types of activity levels. The problem is that the price has risen since then. So for example, if we were here and we saw these types of activity levels, that would be fine. But since then, we have done like 40%. Plus 40%, right? So we would expect the on-chain activity to keep up with Ethereum's price action. We would expect the network activity to reflect accordingly its price activity as well, because sustained price rallies often need fundamental support and need elevated on-chain activity in order to happen. At the moment, though, we're not really seeing that for Ethereum. As far as Ethereum's age consumed, yeah, so string of spikes here. This is also one of the things that I pointed in last week's report. String of age consumed spikes at the top, pointing to a very strong behavioral shift by long-term Ethereum holders. They were sick of this rally, it seems, a lot of them, or they were just looking to take some profits. Very shortly afterward, we saw a downward correction. Since then, there has been one notable spike here at the local bottom, but overall, nothing to write home about. So at the moment, it seems the most long-term holders are kind of sticking to their guns and holding their bags, which, you know, I think in general should be a relatively good sign, like we saw here, right? During a ranging period, low token age consumed levels point to generally strong confidence by short-term holders. I would like to see this continue to drop in the next couple of days to let me know that you know, these holders are here to stay and they're not looking to sell off at these levels, no matter how much we range. All right. Yeah, let's end with MVRV. I think that's fine. So guys, obviously we are just looking at like 4 or 5 metrics here. This is because of time constraints and because it would be difficult to go over each of these metrics, but each of these metrics is crucial to really understand the full context of the market. So I definitely suggest anyone that's interested in this, after the call, check out app.santiment.net and go through all of these metrics. There's an explanation for all of them, as well as additional tutorials here, so you can kind of, you know, understand by yourself exactly what you're seeing. As far as Ethereum's MVRV is concerned, or unclaimed profits, we're also in the middle of the road. Very sort of annoying if you're trying to predict where the market is going to go, but it is what it is. We're currently at about 10%. So Ethereum's short-term holders are at around 10% in profit on average. We have seen them go up as high as 33, I think, percent. Yeah, 32 here, meaning that, you know, at these levels we could easily grow higher in the next couple of weeks. But at the same time, we have seen it go lower as well. So we're just in a sort of middle of the road as far as profit margins are concerned for all of these coins, and that's a difficult period for you to make any predictions. Similar here, 365-day MVRV, so long-term Ethereum holders, their average unclaimed profits currently about 60%. Yeah, 62. They have been often lower than this, but they have seen much higher margins as well. So we've gone to as high as 88%. So once again, based on Ethereum's MVRV, I would just think that this is currently a very sort of a shaky market. It's difficult to predict which way we're going to go. It's good that we're at least seeing a decline across the board in the sell side pressure for altcoins. Ethereum, Chainlink, I think iFi, I saw a similar pattern, SUSHI, REN. All of these seem to point to a declining reaction of the market as far as selling off is concerned. I wouldn't, just like Max, I think if Max is still on the call, Max, we had this discussion earlier. We wouldn't really be sure which way to predict the market going at the moment, right? It's kind of just in the middle of the road, and it's not, there aren't any clear indicators of either bullish or bearish tendencies. Would you agree?
Generally, yes. It's indecisive.
Yep.
On one side, we have unfinished business on the top. On the other side, we're struggling with breaking. So we're always deciding, okay, should we go first visit the lower and then break up, or first we go up to, I don't know, 23, 24,000, and then we go down. So the kind of discussion which we have internally. But as we said today in our internal analysis, there are some metrics which we pay attention once we go other way. If you as a trader, I would wait. So it's literally, you don't know, go long. If you're a trader. Investor, yeah, you can still keep and try to squeeze this fifth wave, which can be amazing in crypto. Can take some risk. But I don't know if you're finished, you know, or not with this few metrics which you can. With this few metrics which we would pay attention once we go other way, or the up or down. But you keep mentioning it actually constantly. It's the same metrics.
Yeah, I would.
Profit loss. And
yeah, exactly. I would look at coinage consumed as one for signs of increased price volatility, happening in the next couple of days and weeks. And I would also look at, like Maxim said, network profit loss, which points to sort of average. In general, this shows the total network profit or loss on a daily basis. So when you see this metric spike into positive, extremely positive like this, it indicates that on average, Ethereum holders are selling at massive profits or substantial profits. And usually these sort of substantial profit taking does tend to coincide with short-term corrections like we saw here and like we saw during the November 24th top. On the other hand, we also very often see major sort of sell-offs or people selling at a major loss coincide with short-term bottoms, which we saw here. We also saw it here. We saw it several times here as well. Because in general, it points to a increased market pain, market-wide pain. People are selling their bags at significant losses. They are so unconvinced that the market is going to recover that they're okay with exiting without without their paycheck. So in general, these types of low levels of network profit loss point to possibility of a incoming recovery. So keep an eye on this. At the moment, it seems like the profit taking, is still, people are still taking profits, but way less than last week. Once again, pointing to market indecision, where they're not really sure what to do. Keep an eye on this metric in the next couple of days. If we see massive profit taking spikes, it might point to a short-term correction. And then if we see people, if we drop once again and we see people selling off during a dip, it could point to a sort of short-term recovery as well. So that's it. Okay, I think we're gonna call it quits there. Brian, you want to sign us off and let us know if let me know if I missed anything?
You bet. Yeah, thanks Dino and Max for all the great insights you guys have shown off on this latter half of the call. And I just dropped the Discord link in our YouTube chat. So if anyone has not joined yet, please feel free to join our community. The more the merrier, and we love to have new fresh faces there all the time to answer questions as they arise about our metrics. Make sure you guys know exactly what you're doing and how to navigate the way we have on this call. And we're looking forward to seeing how the markets shape up over the next week, and looking forward to reporting what we've seen according to our on-chain and social metrics ourselves. So happy trading to everyone. Stay safe out there, and greatly appreciated for all of you who joined us on the call today. We'll talk to you all next week. And for now, signing off, Brian and Dino.
Thanks, guys. Talk to you soon.